You're watching Silver News Daily. Subscribe for more.
Reaction to the markets, I think that you're getting a little bit of panic, a little bit of fear. You can see that if you look at the volatility index, which is trading close to 45, which we haven't seen that for years. This is a straight out now panic sell. We haven't had one for quite a while, but it did start Wednesday. Interesting enough, Wednesday at the close at 4 o'clock Eastern, the NASDAQ was up 400 points. And since then, it's lost about 2,800 points since that top on Wednesday's close. And again, I think that you're having panic selling, which is understandable. I mean, even gold is being sold off hard here. And of course, it's being sold off, A, because it's been overbought, and B, some people are selling their profitable stuff like gold to support the losing positions they have, which is backwards, but that's really what's happening.
It's happening. Right now, in real time, the silver market is flashing a signal we haven't seen in over a decade, and barely anyone's paying attention. But that's about to change. Next week could be the ignition point for a monster rally, one that doesn't just take silver past $32 or even $40, but sets it on a collision course with its all-time high and possibly beyond. The gold to silver ratio has just hit 100 to 1, a level that historically screams one thing: silver is dirt cheap. And when this ratio snaps back, it doesn't do it quietly, it erupts. In 1980 and again in 2011, these exact setups triggered silver explosions that left gold in the dust. Now, with a perfect storm of monetary easing, a falling dollar, surging industrial demand, and geopolitical chaos hitting all at once, silver is staring down a $50 plus breakout that could happen faster than anyone expects. The mainstream media is asleep, the institutions are moving in silence, and the smart money is already stacking. So the question is, why is next week so important? What's coming that could flip the entire silver narrative on its head? Stay with me, because what's about to unfold might be the most explosive silver rally of our lifetime.
Silver will recover. I think platinum will recover. I think there'll be a handful of equities that will recover. You have to be those. You have to be a stock picker kind of person. I think the grain markets will recover pretty dramatically. As these prices in oil come down, I think that you'll see a big pop in the grain markets. You got natural gas oil, you got crude oil is down 15% in 2 days. And that's a big help. That's really a big help for inflation. Okay. That's one of the big things that I've always said all along is that, our country is about 80% fossil fuels. Okay. That whether you're making plastics, whether you're delivering goods, whether you're driving your car, whatever you're using it for, we use about 80% of our economy correlates right back to fossil fuels. So if you bring the cost down, which we're now down, we were at 73 the other day, we're now at 61. Okay. So if you bring those prices down, it brings the price of transportation down, it brings the price of delivery, which means that our prices should start to fall at the grocery store as well, which means that more of Americans' money will be able to stay in their pocket and they'll be able to afford to eat. And we're now starting to see some big sell-offs in the cattle markets as well, which have held up forever, and they're getting clobbered today as well. So I think that, again, I'd look to the grain markets, I'd look to gold, I'd look to silver, I'd look for some spot equities, some real strong companies that are under heavy pressure right now. Maybe an Apple or something like that. Again, I'm not going to make any direct recommendations, but I think Nvidia has been very well overdone to the downside, and those are places I'd be looking at. And certainly, I'd look at the main indexes, the SPY or the Qs. I mean, those have a much broader representation and are much more less affected by news items because they're stable. Even though they're getting clobbered today, they're still more stable than any individual stock.
Silver has already started its run, but what we're seeing right now may just be the warm-up. Year to date, silver has surged nearly 19% on international markets and over 15% domestically, and it's doing this in a climate where gold is dominating headlines. But here's the kicker. Silver is quietly outperforming. In fact, it has emerged as the top-performing asset of the year so far, and almost no one is talking about it. This is classic silver behavior. Underappreciated, overlooked, and then suddenly unstoppable. We've been here before. In the early stages of every historic silver bull market, the metal first starts to climb subtly, while attention stays locked on gold. But then silver breaks away, accelerating with a vengeance. That's the phase we're entering now. This isn't just a relief rally or a speculative spike. This is a calculated move driven by deep structural forces. The rally has been fueled by key catalysts: monetary easing, weakening of the US dollar, and the increasing recognition of silver's role in both industry and finance. Silver breaking 1 lakh rupees per kilogram in India wasn't just a headline, it was a signal. The 1,25,000 rupee target now being floated for 2025 isn't a fantasy. It's a logical step forward if current momentum continues. And globally, traders are beginning to realize that silver's performance in 2025 could eclipse anything we've seen in recent memory. What we're seeing is a market in transition. Quietly, methodically, silver is setting up for something massive. And once the masses catch on, it'll be too late to buy at these levels.
That's a trade I would consider. Gold for silver, of course, I buy them both. But I think it's a great trade in here. I think silver has a great potential. But again, as we talked about, I mean, if you even look at copper, okay, copper was charging higher. It was 520 just a few days ago. Now it's 430. So it's down almost 20% in a couple of days. You're getting this panic sell. And if you're a trader or an investor, these panics are great opportunities, especially in asset classes like gold and silver that you want to own anyways. You might have to take a little bit of heat, but I think it's a great place to be in and a great opportunity.
What's quietly been lighting the fuse under silver's rally is the very thing that moves markets more than anything else: central bank policy. Around the world, monetary easing is accelerating. The Federal Reserve has already made its intentions clear. Rate cuts are coming, and when interest rates fall, it does two things simultaneously. It weakens the dollar and reignites demand for real assets. That's why silver, more than almost anything else, stands to benefit in a way most investors still don't understand. Let's break it down. A falling dollar makes silver cheaper for international buyers. And in a globalized market, that kind of discount is like ringing a dinner bell for capital. We're already seeing the dollar index slip from above 110 to around 103. This kind of downward momentum is fuel for precious metals, and silver in particular responds with leverage. In the past, every major silver rally has coincided with a period of aggressive monetary loosening, because silver thrives in uncertainty, and central banks cutting rates is the biggest signal of instability out there. But it's not just the US Fed. Central banks across Europe, Asia, and emerging markets are all easing at once, creating a synchronized policy shift that could create an enormous global bid for silver. Investors aren't just buying metals, they're fleeing fiat. Confidence in paper currency is quietly unraveling, and silver is one of the few assets that offers both monetary refuge and industrial utility. That's a rare combination, and in times like this, it's incredibly powerful. What we're looking at is a monetary regime change, one that doesn't just benefit silver, but supercharges it. Because silver isn't just a bet against inflation, it's a bet against the system itself. And when that system starts to bend, as it is now, silver doesn't just move, it explodes.
Wednesday, Elijah. Wednesday at 4 o'clock, the NASDAQ was up 400 points. That was after what Trump's speech was, and his take was put out. Then when he talked, obviously they didn't like what he said, and the markets reversed and were down 400 points an hour later. Okay, so it had a dramatic swing. We knew the tariffs were in play, but you're now getting some pushback and some negotiation. The France, whatever you want to call him, it wasn't the prime minister, but said, well, let's not buy any more U.S. companies. So you're having a little bit of a pushback, a little bit of a battle, and that creates panic. Uncertainty creates panic in markets, and it usually turns out to be an unbelievable buying opportunity. And I'm not saying it's right here, but I would certainly say that where these tariffs are not a problem. I'm a big fan of the tariffs. I don't care that China wants to charge 34% back. I just assume become the island of the United States. So to me, it'll work out well. And the jobs number was very good today. The jobs beat by, it was expected was 150. They came out with 222. So it was a pretty good beat. And again, there's no surprise when you and I talked last and we talked about President Trump. I said, I don't care how good he is, and I like him, and I think he's great. But also, there's going to be some pain before there's going to be some pleasure. And I think we're seeing the pain.
Silver's secret weapon isn't just its role as a monetary metal. It's the fact that it's absolutely critical to the technologies of the future. And right now, that future is arriving faster than anyone predicted. The green energy transition, the AI explosion, the rapid digitization of everything from vehicles to infrastructure, it all runs on silver. This isn't theory. This is happening. Start with solar. Photovoltaic cells, the backbone of solar panels, can't function without silver. There's no viable substitute. As governments pour billions into renewables and solar energy becomes a centerpiece of global policy, silver demand is skyrocketing. In fact, solar already accounts for nearly 20% of global silver consumption, and that number is expected to surge year after year. The world wants to go green, but silver is the cost of that ambition, and right now, supply can't keep up. Then there's electric vehicles. Every EV is packed with silver, from battery connections to electrical systems. As production ramps up and automakers shift their entire fleets toward electrification, demand for silver is going parabolic. By 2030, EV output is projected to triple, and silver will be riding shotgun in every unit. Add in the rollout of 5G networks, AI-integrated hardware, and the exponential demand for high-performance electronics, and it becomes clear. Silver isn't just in demand. It's essential. This is where silver's value proposition separates from gold entirely. Gold sits in vaults. Silver moves the world. It's embedded in the circuitry of the new economy. And as long as this industrial revolution continues, silver demand will rise, regardless of what the broader economy does. That's what makes this rally so unique. It's not just about fear or speculation. It's about necessity. Silver isn't going up because it might be useful. It's going up because without it, the future doesn't work.
All in trouble. Again, obviously the big six are in that too big to fail category, so that makes them not as susceptible. But again, I think that they took full advantage when President Biden during COVID gave them the ability to go over 10 times one to lend. I think that let them get well too over leveraged. I think that that's why you're seeing the Fed trying to cut the Fed funds rate at the bank, which is what they borrow. But, people are looking for rate cuts this year. There's going to be no rate cuts this year unless the Fed wants to fix the banks. But again, for the average person, there is going to be no rate cut. Our rates have not come down, even though the Fed's cut a full percentage point off the rates.
But here's the part almost no one is talking about. While silver demand is erupting from every direction, supply is quietly breaking down. We're now entering the 5th consecutive year of a global silver supply deficit. That's right. Year after year, the world is using more silver than it's producing, and the gap isn't closing. It's growing. And the implications of that are enormous. Mining output hasn't kept pace with rising demand. Exploration budgets were slashed during the last bear market, and new discoveries are rare. Most of the high-grade silver deposits have already been exploited, and what's left is harder to extract, more expensive, and slower to develop. That means even if miners wanted to ramp up production tomorrow, they couldn't. It would take years to bring new supply online, and by then, the price could be unrecognizable. Meanwhile, recycling isn't picking up the slack. Unlike gold, which is hoarded and recycled endlessly, a significant portion of silver is lost in industrial processes, used in tiny quantities across millions of products and devices. That silver doesn't come back. It's gone. So while demand surges higher with every new solar plant and EV rollout, supply continues to lag further and further behind. This is the powder keg beneath the surface. When you combine hard demand with constrained supply, you get a squeeze. Not just a gentle upward drift in price, but a violent, sudden repricing as the market wakes up to the reality that there simply isn't enough silver to go around. We're already seeing cracks in the market. Refiners struggling to fill orders, premiums rising, and physical shortages popping up in retail and wholesale channels. This isn't just a chart pattern or a seasonal trend. It's a structural crisis, one that's been building for years and is now coming to a head. The market can ignore it for only so long. But when the shortfall becomes impossible to hide, silver won't just rise. It'll be repriced entirely.
I think that this is when you have panic in the markets, people sell profitable assets to support losers until they have to sell those as well. But I think what you're looking at here is a market that it's perfect timing for gold to go down because it was so overbought when we got close to 3,200. I mean, again, it went straight up. It was going parabolic. Markets don't work that way. the math, the geometry of the market never works. When they get too far overbought or they get too far oversold, there's always going to be what they call the mean reversion trade. And I would expect to see that. I would expect gold to go down even a little bit further, and then it'll get oversold. You'll get a little bit of a bounce. But I think gold, I'm targeting 2,800 in gold to re-enter. I mean, I'm not out yet. I still own physical metals, but to be a new buyer, I'm targeting 2,800, and I think we'll get there. I think that you will also see, maybe even possibly as soon as today, you'll see a big bounce in the equity market as well, just as a natural reaction to very oversold conditions. And once that is over, I think that'll be another selling opportunity. I mean, I think this is the start of the much bigger sell-off that you and I have talked about for about the last 12 or 14 months on this channel, that I expect a huge haircut to this market, and I think this is the beginning.
And if that wasn't enough, the geopolitical pressure cooker is reaching full boil. And silver is one of the only safe exits left. President Trump's chaotic return to tariff warfare is throwing markets into turmoil, with new duties slapped on over 180 countries. The global economy is teetering on the edge of a major slowdown. And when markets panic, silver shines. But here's where it gets even more interesting. Silver doesn't just benefit from fear. It thrives on systemic disruption. The more uncertain the world becomes, the more valuable silver's dual identity becomes. Unlike gold, which is purely a hedge, silver offers the unique ability to ride both sides of the chaos, as a safe haven during financial instability, and as a critical industrial resource in times of economic transformation. That's why it's catching the eye of serious investors. Trump's tariffs have already driven gold to new record highs. Silver, on the other hand, took a brief hit, because the fear was that industrial demand might cool off. But that's the short-term noise. The real story is what comes next. As the economic fallout spreads, central banks will be forced to double down on stimulus. More easing, more currency debasement, and more fuel for silver's fire. And let's not forget the rising risk of recession. When uncertainty hits and the fear trade kicks in, silver plays catch-up fast. In previous downturns, it has spiked harder and faster than gold once the fear turns into action. That inflection point is approaching again. You can already see it in investor behavior, flight from equities, hoarding of real assets, and whispers of stagflation creeping back into the narrative. This isn't some hypothetical doomsday scenario. It's the world we're living in right now. And silver, with one foot in monetary protection and the other in industrial necessity, is uniquely positioned to benefit from every angle. The more unpredictable things get, the more inevitable silver's next leg up becomes.
Targeted a collapse, but I think he's making the tough decisions right now, as like he says, to make America great again and to bring back jobs into this country. You know, if you look in this country, we don't have very good jobs anymore. You know, everything is a service industry based. There's no more manufacturing, very little. And I think he's trying to bring that back because, you know, there's a big part of our population that isn't into the AI world, that isn't into the computer programming world. You know, we still have a lot of people my age. Okay, I couldn't get a job today if I had to go out and get a job that would pay me anything. And I think that he's trying to bring back those jobs and bring back that control. I think the biggest thing that we're seeing now is that President Trump is taking control of the world and showing that the U.S. is the leaders and we can deal with whatever you want to dish out. And we're not going to let you take advantage of us anymore, which they had done for the previous 4 years under the Biden administration. We gave away everything. Okay. And again, you look at everything that we've done over the years. I mean, we were at one time in the world, we were the number one in education. Now we're 40th. You know how many countries we have to be behind to be 40th? So all of these things, I think we're standing up, and Trump is saying we are the world leaders. Like it, you can participate with us. Don't like it, then we're not going to help you. And I'm in agreement with that.
There's one signal in the silver market that veteran investors treat like gospel. And right now, it's screaming louder than it has in decades. It's the gold-silver ratio. And at over 100 to 1, it's flashing one of the clearest buy signals we've seen since the 20th century. Historically, whenever this ratio spikes above 80, silver doesn't just outperform gold. It detonates. Let's break this down. The gold-silver ratio simply measures how many ounces of silver it takes to buy 1 ounce of gold. For much of history, that number hovered around 15 to 1 to 40 to 1. In moments of crisis and monetary transition, it's known to stretch higher. but every time it hits extreme levels, it snaps back violently. The reversion doesn't just mean silver rises, it means it catapults. In 1980, when silver went vertical to nearly $50, the ratio collapsed from over 80 to around 17 in a matter of months. In 2011, it fell from 70 to the low 30s as silver surged again toward its all-time high. And today, we're sitting at over 100. This is a market screaming imbalance, screaming opportunity. Because silver is massively undervalued relative to gold, and historically this never lasts. But it's not just about history. The gold-silver ratio is a reflection of investor psychology. When fear is high and uncertainty looms, gold is the first to run. But once that initial surge levels out, silver starts to catch fire. Why? Because it's cheaper, more volatile, and attracts a wave of momentum money once the breakout begins. This is the setup we're staring at right now. And here's the best part. As silver begins to close that gap, it doesn't just return to fair value. It tends to overshoot. That's how we get to $50, then beyond. The current ratio isn't a footnote. It's a roadmap. And if history is any guide, silver is about to leave gold in the dust.
Gold, platinum twice what gold was. Again, it's hard to fathom what is going on here with platinum. I do think it's a buy at about the 940 area, which is I think is pretty solid. But again, it's a mystery to me as well, Elijah, that platinum has gotten so much trashed compared to gold. I mean, I'm a big platinum buyer. To me, platinum is on sale at these prices, and certainly if you're a physical buyer, I would just buy it and put it away because I do believe that it will recover. And again, it has more than one use. I mean, gold could be used as a currency, but is obviously more used for jewelry and other things like that. Whereas silver and platinum are both industrial metals along with palladium.
If there was any doubt about silver's trajectory, that vanished the moment it blasted through the $32 resistance level, a ceiling that's held strong for over a decade. For years, silver has been trapped in a long, grinding consolidation, frustrating bulls and lulling the market into complacency. But that breakout, that was the alarm bell, the technical signal that the game has changed. Here's why that level mattered. $32 wasn't just a random number, it was the neckline of a massive long-term formation, an accumulation range that's been quietly building energy since the 2011 peak. When silver punched through it, it confirmed what traders had suspected. The bulls are back in control. And this wasn't a flash in the pan. It was a momentum shift, a paradigm reset. Every major silver breakout in history has followed this script. Long consolidation, low volatility, rising pressure, and then eruption. And this latest move wasn't driven by hype. It was backed by fundamentals, macro shifts, and institutional flows. Volume exploded, short sellers scrambled, and a wave of technical buyers poured in. The result? Silver cleared $32 with conviction. And now $35, $40, even $50 are in play. But the significance goes even deeper. Breaking $32 also shattered the psychological barrier that's held investors back. For years, silver has been seen as the metal that should rise, but never does. That mindset is now dead. Confidence is returning, and with it, a flood of new capital. Technical traders, algorithmic systems, and hedge funds are now reprogramming their models to account for a bullish silver trend. This is how trends begin. Quietly at first, then suddenly, all at once. And now that silver has broken out of its cage, the path forward is wide open. With no major resistance until $50, and the gold-silver ratio flashing maximum upside potential, the next move isn't just probable. It's almost mechanical. The chart has spoken, the market has confirmed, and silver's rally is just getting started.
But I would target 2,800 in gold. So that's, however long it takes to get there. Now that could change, but as of today, I think 2,800 is the level that we're going to get to. Again, there's no way to say time this market and say when it's going to happen by, only that I expect it to happen. And I expect to see gold by year end back around 3,500. But before then, I would not be surprised if it got to 2,700, but I'm targeting 2,800 right now. I mean, it could be next week. With the volatility we're getting back in the markets now, I mean, now, a $70 move in gold is really no big deal. I mean, I'm watching it now while I'm talking to you. It's just move up and down $10 in each way on virtually nothing. So timing it, I can't do that, but I will say that that's what I would expect, and I would be willing to hold it if I bought it at 2,800, and I would hold it because I think it's going to go back higher.
While the public is still debating whether silver's breakout is real, the institutions have already made their move. Behind the scenes, capital is flowing into silver at a pace not seen in years, and it's coming from some of the smartest money on the planet. Exchange-traded funds tied to silver are seeing massive inflows, physical inventories are being drained, and big players are building positions quietly, strategically, without fanfare, because they know what's coming. The key to understanding this phase is recognizing who's buying and why. Retail investors may chase headlines, but institutions act on data. They're looking at the same fundamentals we've been covering: rising demand, collapsing supply, monetary easing, and geopolitical volatility, and they're positioning accordingly. Silver ETFs like SLV and PSLV are reporting significant increases in holdings, and that's just what we can see. The real moves, the off-exchange contracts, the private storage deals, the direct refinery orders, are happening in silence. And here's the twist. The more physical silver gets locked up by ETFs and private investors, the less is available to meet industrial demand. This creates a self-reinforcing squeeze. As available supply shrinks, premiums rise. As premiums rise, more investors panic buy. And as that cycle accelerates, the pressure on price becomes almost unbearable. That's the squeeze. Wall Street is watching, and they want to be in before it starts. We've also started seeing evidence of positioning in the options market, with large call volumes targeting 40 and 50 strike prices. Bets that only make sense if you believe a major move is imminent. These aren't random trades. These are calculated plays by entities with resources, research, and reach. When this kind of money starts moving into a thin market like silver, it doesn't just nudge the price, it launches it. So while the mainstream media downplays the rally, the people who actually move markets are getting into position, quietly, aggressively. And when the breakout becomes obvious to the public, these early movers will already be sitting on massive gains. That's how these cycles always work. First come the whispers, then come the headlines, then comes the stampede.
Again, I couldn't agree more. I think, again, if you can buy both, I'd buy both. I mean, I would wait on gold because I do think it's going lower, but silver has got cracked. It was just $35. Now it's 29. So silver is down almost 20% in a couple of days. So to me, that's a value play. And I bought some this morning, and I'll look to buy some more maybe before the close. I think that it's a great opportunity. And again, could it go lower? Of course it can. I mean, there is no guarantee. But when you see these extremes, and we all know that at some point, if you're watching like the bonds and the notes right now, there is a little bit of, they call it a flight to safety. They're exploding higher, bringing interest rates a little bit lower. But I think gold and silver are a better play for that. And the gold and silver are also a better play for inflationary times. So I think that all said and done, I think that to buy silver at 100-to-1 ratio to gold, I think is a great opportunity.
The $50 mark has always loomed large in silver's story. A psychological barrier, a historical ceiling, and a point of maximum resistance. It's where silver peaked in 1980 during the Hunt brothers' squeeze, and again in 2011, when global fear reached a boiling point. But what if this time, $50 isn't the end? What if it's just the beginning? That's the case more and more analysts are beginning to make, because when you factor in inflation, supply destruction, and surging demand, $50 isn't even a return to form. It's a starting line. Adjusted for inflation, the 1980 peak would be well over $150 today. And the structural drivers that powered those past surges, they pale in comparison to what's building now. Back then, silver demand was almost entirely monetary and speculative. Today, we have a monster industrial engine under the hood: solar, EVs, AI, all consuming more silver than ever before, with no alternative materials in sight. And on the financial side, central banks are devaluing fiat faster than they can print it. The backdrop has never been more bullish. This means that when silver touches $50 again, and it won't be a ceiling. It'll be a signal, a green light, a trigger for a second wave of capital as technical traders, hedge funds, and mainstream media all pile in. That's how breakouts work. Once the big number falls, momentum takes over. Sentiment flips. FOMO kicks in. And what was once resistance becomes the new support. And here's the kicker. Unlike 2011, this time, silver is entering its breakout with ETFs, digital brokerages, and global retail access all fully integrated. The infrastructure to supercharge a retail frenzy is already in place. All it needs is a spark. And $50? That's the spark. That's the line in the sand. Once crossed, the floodgates open, and silver's revaluation will truly begin.
I think if you're in the market and you're long stocks, I would not panic out here. Okay. If you're not in the market, I would certainly start looking for some value and to be able to buy. If you're a trader like myself, as well, an investor, I would certainly look for a spot to buy. I'm not saying to buy right now, but you're going to see, I predict in the next 4 or 5 days, you're going to see a monster rally that's bigger than the sell-off. Okay. Like today we're down, the Nasdaq's down 1,000 as we're talking right now. One day next week, or maybe even today it'll rally back, but one day next week, I think you'll see the Nasdaq up 1,000, which will be a selling opportunity. But if you're a trader, you want to take advantage of both sides. And I'd be looking for a spot to buy into equities for on the short term in the futures market. And then in the stocks, look for some long-term holds that I'm willing to take a little bit more heat on if I have to.
So what would it take to push silver beyond even the legendary $50 mark and into triple digits? The truth is, it's not as far-fetched as it sounds. We're already seeing the foundational pieces fall into place. Chronic supply shortages, exploding industrial demand, a collapsing gold-silver ratio, and massive institutional positioning. But to breach $100, something bigger needs to happen. Not just a rally, a reset. Picture this. The global financial system continues to crack. Inflation refuses to fade. Central banks are forced into aggressive money-printing cycles just to keep economies afloat. At the same time, geopolitical tensions escalate, whether it's Trump's unpredictable trade wars, a deepening recession, or new shocks from emerging markets. In this environment, confidence in fiat currency erodes fast. Gold soars. But silver? Silver erupts. Because silver doesn't just track gold, it overreacts to it. In both 1980 and 2011, when gold rallied, silver outpaced it dramatically. Why? Because silver is thinner, more volatile, and more reactive to investor psychology. When fear grips the market, silver transforms from a lagging asset into a ballistic missile. And in a scenario where fiat trust collapses and real assets become the only hedge, $100 silver stops being speculative and becomes logical. But it's not just crisis-driven. Imagine a future where solar becomes mandatory, where EV production triples, where AI hardware demands scale globally, and silver is embedded in every device, every circuit, every grid. In that world, silver isn't just a hedge, it's a necessity. And the price? It stops being defined by charts and starts being dictated by availability, supply and demand. Real-world utility. That's the silver at $100 story. It's not hype. It's what happens when monetary and industrial systems collide, when decades of suppression meet a tidal wave of demand. And if we reach that point, the moves we've seen so far will look like a warm-up, because silver at $50 is impressive, but silver at $100? That's the revaluation of a lifetime.
I do think that you're going to see the banks are in trouble. I think we haven't been told the banks are in trouble, but take a look at J.P. Morgan down $33, down 20% in 2 days. Okay, that tells me that the banks are in trouble, which is my opinion that the phony stress tests that we get, they're over leveraged, and of course these loans are resetting, and that's going to cause some of these issues. And of course, unfortunately for us taxpayers, we'll be the ones who have to bail them out again.
Everything we've discussed, every chart, every signal, every macro force, is converging toward one outcome. Silver's monster rally isn't a speculative fantasy. It's a near inevitability. The gold-silver ratio is screaming undervaluation. Supply is in deficit. Industrial demand is on fire. Central banks are easing, and smart money is moving in stealth. We're not just looking at another silver rally. We're standing on the edge of a generational breakout. Next week could be the ignition point. The moment the market wakes up to what's really happening. And when it does, silver won't climb slowly. It'll move with speed, with violence, with the kind of intensity that only happens when fear and fundamentals collide. $50 isn't a ceiling. It's the first domino. Once that falls, the real rally begins. So now the question is, are you watching from the sidelines, or are you ready for what's coming? If you want to stay ahead of the financial reset, hit that subscribe button and stay locked in. The biggest shift in the silver market in decades is already underway. And remember, this is not financial advice. Always do your own research and speak with a licensed professional before making any investment decisions.